All right, good morning, everyone, and welcome to Stock Analysis Friday. My name is Bennett McDowell with TradersCoach.com. Great to have you here today. And today is October 4th, 2024. All right, a quick rundown on Stock Analysis Friday. First of all, we're here for you. And the purpose of Stock Analysis Friday is for me to look up any stocks or ETFs that you may have a question on. When you type in the ETF or stock for me to look at, if you wouldn't mind, please do that in caps. And also indicate whether you're long or short or thinking about going long or short. All right, that way I can tailor my analysis to your specific scenario. All right, let me go through a few quick items here, and then we'll go ahead and get started. First thing I have to, of course, go over are the risks involved in trading, and then let you know that past performance doesn't guarantee future performance. And we deal in a realm of probabilities when we trade the financial markets or even invest in them. And you have to be aware of that. And also risk management and also funding your trading account with money you can afford to risk are really super important. So please keep that in mind. And then finally, because we're going to be making recommendations, remember that these are my opinions based off my 30 years of trading the markets and also based off my software. All right, so they are my opinions on the market. They're good ones, but they're still my opinions. So please run those by your financial advisor or whoever manages your money to be sure they're suitable for you. All right, and then finally, when we talk about funding your account with risk capital, if you are a day trader, I have a big recommendation for you guys. And that's, of course, I don't know if you've heard of prop firms, funding firms, but they're pretty popular today. And the one we like the best is called Apex Trader Funding. And I'm going to put the link up there in the recording for you guys to have it. But I'll put it up here real quick for you in the comments area. So if you're interested on that, this link actually can save you quite a bit of money. And you may be interested in taking advantage of that. But it's kind of a way to get into day trading without exposure to your real money. And they have rules and they have regulations, but the idea is if you do well, then they fund you for real, so to speak. And then you get a 90% payout on any profits you make. And they also give you free data. So the data alone, even if you never get funded, is worth it because you're going to pay more for data through a live feed than you will through Apex. So I like to throw that out there. It's not for everybody, but it certainly is a great way to get involved in day trading futures. All right. Also, too, I have several books available. I've got books on money management that can help you. Elliott Wave and my new book, The Art of Trading, is coming out this year, published by Wiley. So you can check those out. And then finally, when we look at charts, we're going to be using software at traderscoach.com. We also have a specific website dedicated to it called appliedrealitytrading.com. So you can go check that out there and you'll see it on the charts. And then finally, give us a like, subscribe, or a share. All right. And as Gene says, good morning to everybody and welcome everybody. I'll put that up there. So let's go ahead without any further ado and go ahead and get started here. And I'm going to go put it on the longer term charts over here. And then we can get going. So on my charts here, just so you know, I've got on the far left-hand side a 60-minute chart. And for those of you that don't really know what that means that every price bar on that specific chart on the far left that I've marked is basically represents an hour of trading activity. Chart on the center is what we call a daily chart. And every price bar represents a full day of activity. So this chart here is what we really use as our primary chart. Most people that swing trade the markets use that daily chart and that 60-minute chart. And then our long-term traders use the weekly chart where every price bar represents a full week on the right-hand side. So for example, if you were like trading or investing, you'd probably use that longer-term chart more often as your primary. However, we use all three. So when we type in a symbol, it gives us kind of a good clue of what's going on the different time frames, short-term, intermediate, and long. And then up at the top here, we have our scanners. We're not going to be using those today because you're going to be giving me the stocks. All right, so go ahead and start typing those in. I'm going to start running down a few here that I think you need to take note here. The first one is an ETF called UNG. It is a natural gas ETF, and it's kind of coming on our radar screen here simply because it's been in a huge downtrend. I'm going to open up the weekly chart first. I mean, do I need to open up any more? I mean, look, it was way up here, and now it is way down here. I'm not even going to give you the numbers because they're so phenomenal of how high it used to be. But this is more of a close-up of what it looked like in the last several years. And what we're liking about it now is that this indicator that I developed here is called the OWL, which measures momentum. And as a trend comes to an end, the momentum starts to dry up. And we're seeing that here. All right, so that's a really good sign for a long trade, because you don't want to go long if that momentum is still heavily against you. So that is an area we're liking. We'd like it to turn green, but it's almost green, and it seems to be starting to perk up. Now, you got to be careful. If you go in early, you could get stuck in a little bit of a sideways market. It's always possible to get one more bottom, but this is pretty good looking in terms of if the shorter time frames, the other time frames I mentioned, are looking good for a trade. So let's look at those. And I'll open up the daily chart next. And notice here that the momentum I showed you on the weekly chart on this OWL here is now green. All right, so that's good. We kind of use, just as a side note, these indicators at the bottom, we kind of use them as confirmations of what we want to do. So they're almost like, if we probably should add a checkbox to them. And so when we're thinking about going long, we look for some specifics. Now, right here, we had another low. So these are lows here. And notice we have a double bottom. All right, now that's a form of technical analysis. It's pretty standard. And usually when you have a double bottom, what's happened is you've had a spring initially off the bottom, a retest that holds, and then a big move up. So that's usually a good sign that a bottom is in. So we like to see that. This is another reason why UNG came across our radar. And then we start seeing some of our software in action here on price action. And we started to get these pyramids over here. And when prices clear the pyramids, they are taking out fractals, bullish fractals in this case, to the upside. So we like that as well. Now, the first leg up, okay, after the second double bottom here, all right, you want to keep your stop fairly far away because you usually get a decent pullback and then another move up after that. So you want to make sure you don't get stopped out by having your prices too close, unless you want to be, all right? That's the purpose of the pyramids. They're giving you areas if you want to get out right there. One more indicator I want to show you here is called the PTF. That's the one right under the OWL. So the OWL measures momentum, whereas the PTF here is taking a look at a previous high or low and indicating with a probability of if there's a possibility of going or exceeding those points. Now, in this case, it's a green PTF, and the highest price bar in that green area sits way up here. That was achieved back basically in, let me just see where that would have been. That would have been in May, okay, of 2024. So there, when it's green like that, there's a 75% probability, and 75%, is pretty high, especially when we deal with anything in the markets. So that's saying that eventually there's a 75% probability it's going higher than that. So once again, when you take a look at all the things we like to look at to take a trade, we have a double bottom. All right, so that form of analysis is good. We don't longer have an active trend down because this pyramid here, which was bearish, has been stopped out. It's been replaced by a bullish pyramid here. And then let's go down here. Do we have a green PTF on this time frame? Check. Do we have a yellow or green PTF? Check. So that signifies to me a long trade. All right. And our initial target is right here at 22. However, all right, you could also draw fib extensions up a little higher if you want to see if there's a higher target zone. And in this case, if we just use this point to this point, possibly to get up into that target we think it's going to. And then, so I think 22 is a reasonable target for this short term. Now, if it blows through that and keeps going, well, you stay with it. But UNG, I think, is pretty good at this point with a PTF target. Would give you a 2-to-1. So that's one I'm kind of recommending at this point. So that's UNG. And then on the chart on the left, on the 60-minute time frame, I don't see any problems except, it probably will pull back at some point a little bit. So don't have your stop so close. All right. So I like to share that one with you. And now let's go ahead and get started here. All right. Let's see who we got here first. Stuart, I think that's you. All right. All right. So Stuart's indicating on these stocks he wants me to look up, which is LNG, Amazon, and Tesla, that he's long on all these. So let's go ahead and go through them one by one and see what the software says. All right. So, well, good thing to be long here. All right. The question is probably, should you stay long? What do you want to do? Well, let's first analyze this on a long-term chart. Let's see what's cooking on this. So it's been in a fairly good uptrend. Honestly, it started in 2011, I would say, maybe even a little bit before that. So this has been pretty much a steady eddy here. All right. And recently, since 2020, it's really taking off. And I'll tell you, Stuart, one of the simplest things you can do is just grab a trend line. All right. And there's many trend lines you can put on a chart. Okay. This is one. All right. And then you can also isolate one, make it even closer here once you've got a new high in. So that's kind of where you're at this particular point with that. You've had a number of pyramids in a row. Now, pyramids are these triangular shapes that we put on price action. And they're basically, anytime a fractal gets cleared, all right, in the market, and a fractal basically is kind of like a pivot point that gets exceeded in the market. And there's certain characteristics about it that we look for specifically to make it a fractal or to identify it as a fractal. And in a case like this, our software, when it has usually 4 or more P pyramids in a row, all right, then it's kind of looking pretty good for some type of pullback. So here we had a bunch, and then we got a pullback. All right. So, and then we had one going the opposite direction and then another one coming up. So you still probably got some more room here. You're starting to see a little bearish divergence building in the owl. So I don't know exactly where you got in, but let's just say for fun here, let's erase these lines here. But if this thing corrected today, the correction on a profit-taking situation probably is going to be, and let me draw this in for you, probably going to be right around, I would say, here to here. So if it ended today, you have to be willing to, if you're going to stay with the trade, to be willing to give back all the way down to 133 to 99. So that's pretty significant. So you probably want to keep your stop at this pyramid here. All right. That's what I would recommend on that. So that's LNG. For those of you looking for the first time, probably not going to recommend it simply because the trend is pretty extended already on that. All right, let's take a look at Amazon. All right, Amazon, everybody knows what Amazon is, right? Okay, so Amazon is kind of in its target right now, all right? According to the long-term charts, this would have been an Elliott Wave 3. And if you're interested in learning more about Elliott Wave, I have not only a book, but a complete home study course on that. You can just go to our website at traderscoach.com and check that out. So that's a 3. This is a 4. There's 5 waves in a trend. So we're kind of in that 5th wave. We could go a little higher, just like the rest of the market could go higher, but we're sitting with bearish divergence. So you kind of want to keep your stop pretty close. All right, if you were trading a longer term investment, you would have been out already on this pyramid. So that's kind of where that is. Let's see if the shorter term charts are a little more specific. And here's that big dip down that you saw on the weekly chart over here, okay? And notice on this chart here, it took you out also. But if you're still in, it's giving you another stop loss right there around 170. So I'm not going to recommend this one, but you know, could we get one more high? Anything is possible, sure. But it looks to me like Amazon is close to topping here. It doesn't mean it's going to happen this week. It may have happened already, but maybe it'll take a month or two and make one more high. But you want to kind of, again, for all those trend lines up. And if you're looking at the daily chart here, you may specifically want to just grab a trend line, start it here and run it here. All right, like something like that. Or if you want a shorter term one, just grab one here and run it here. But you can see you've already been taken out on that one. So I guess I would stay with it if you're not already out, because you're not, and put your stop below that pyramid there for that one. All right, let's take a look at Tesla. All right, so Tesla's got a little bit more room. I actually like Tesla. I've been recommending that one. So Tesla's target is really going to be the top of the old high here back in what, 2021, 2022, right, where it changed over there. So that's a 3, Elliott 4, looks like a 5. So notice the target zone starts at 352, but the PTF is calling for highs above wave 3 up here, because that's basically the highest high in that area. So this really becomes our target, the PTF. That's why I love this indicator. So that's looking like, well, I'll give you an exact number. So that's looking like a high on that price bar is 414.50. So that would be my target on this. Now, we recommended this one quite a while ago, all right? And right now, if you put your stop here below this pyramid, that'll give you enough risk to reward so to probably go in it. So I think we can recommend that one again. And you kind of want to put your stop under here, okay, at this pyramid. So that would be a low of 182. So a couple ticks under there, something like maybe 181.95, 0.95. I always give it a couple extra ticks, but you get the idea. All right, so that's a go, okay? So you still want to hold that one. And there is, and don't have your stops too close, because you want to reach that target zone, okay? And if you look at that daily chart in here, it's kind of a messy chart, all right? Got a little bit of a pullback going on now, but nothing to worry about. But notice that this particular case as well, we've got a green PTF. So you kind of want to keep that in line there. All right, so that's Tesla, and your, I guess that's it, okay? So that's all three of those. So Amazon, you got to be careful. In a target, LNG. All right, and Tesla is the next one. Tesla is one we're going to put on the recommended list. All right, thank you, Stuart. All right, Jim, how are you? All right, USO. All right, USO is the ETF for oil. All right, gas, whatever you want to think. And let's open up that weekly chart first. Now, USO on a lower time frame has been pretty messy, simply because it's been going kind of back and forth, like you can see on this longer term chart. So whenever you have a messy, and I'll show you the messy chart in a minute, but whenever you have a messy time frame, try to go higher, all right, or even lower if you want to trade inside that mess, okay? But this is kind of what is pretty hard in trading, is when you get this range-bound market. And, you know, when you get a range-bound market, really kind of tough for a trader too, because you know, here's the range, but do you realize about 80% of the breakouts once you were in a range fail? So they, you know, you can think, oh, good, now it's going to go, and then it pulls back into the range. And this is actually an area of what they call accumulation. And a lot of the big institutions use these areas. You'll notice the volume is pretty high in these areas in terms of volume profile. And what happens is they're accumulating, getting ready to take it a certain direction. So this gives them a fair value price as best as possible. It also gives them a chance to wipe out weak hands by going below certain stop levels that are most commonly used by swing traders in the market. All right, so with that said, all right, we're kind of in a waiting mode. Our target here is this target here, and that's 99.63 up to $125.39, and we're sitting at $76.54. So I'm liking it. I think we've got a couple things to look at here. This is red. Notice the owl, and this one is red. That doesn't really concern me in a channel like this because it can bounce around a little bit. So my stop would be under here, under that low right here. Now, if that gets taken out, and it hasn't been in quite some time, over a year, then that's significant. But for right now, I'm looking at this as maybe a 3, 4, some degree here, and a 5, okay? So there we kind of are up there on that. So this is not, the PTF is yellow. Notice this is yellow here. So that's neutral. That's good, okay? You can go long or short on neutral. So USO, I'll put this down as a buy here because prices pulled back enough to give us a nice risk to reward with a stop under the low. And let me just show you the daily chart, which is a mess, okay? I would purely at this time just kind of make sure there's nothing devastating looking on the daily chart, and there's not. It just shows this channel. But this is why you can't, on certain markets with volatility, have your stop so close, right? Okay, so you got to give it room, and that's why I like to look at the different time frames, because obviously the weekly chart is going to be usually calmer than the lower time frames, and so it kind of gives you a step back and take a look at the overall direction and see the best place to put a stop, especially when the lower time frames are erratic. Now, the 60-minute chart on the left is used by traders, swing traders, short-term swing traders, because you're only going to be in the trade maybe a week, 2 weeks at best. But the idea behind that is you're trying to trade the volatility inside these swings. Not recommended for new traders, but eventually when you trade long enough, you can spot opportunities on the different time frames. All right, so that's USO, and yes, bullish on USO from a standpoint of a longer term stance. Okay, all right, let's look, Jim, at your next one, COWZ. COWZ. Okay, so on this one here, let me just move these down a teeny bit so we have a little more real estate on the price on that far right-hand chart. Okay, let's open up this one here. All right, so I don't know if you're long or short on these. Again, if you type one in, just always tell me if you're long, short, or thinking about it. But this is extended, okay? This is obviously one. I always ask people, when you look at a chart, is it better to get in here or here? All right, I think the answer is pretty obvious, all right? So this has been going up for a long time. And again, we had a little pullback. We have bearish divergence. So maybe something 3, 4, 5, we're sitting at a high already. All right, so we got to kind of be a little careful. Let's just take a look and see. I'm not going to start the fib here. It'd be probably more like in this area here. So you see you're already in a fib target zone for wave 5. So that's probably, if you're thinking, if you're in it, put your stop right under this pyramid. It's got you beautifully protected for a change in trend, yet at the same time, it's keeping you in there long enough if in case it goes higher to the upper part of that channel. Now we have bearish divergence in the owl, okay? So, and a big trend up, so there you have it. Now, an alternate look at this would be to simply grab a trend line. I guess you guys by now know I like to do that. All right, and there you have it, okay? So, you know, basically that pyramid sits really pretty there. I might be able to draw one under that price bar there as well, a little shorter term one. But the pyramid's done the job for you here, okay? So just stay with that until that pyramid's taken out. If you're already in it, I would not go in it if you're just thinking about it. Okay, that's COWZ. Thank you, Jim. All right, let's keep going here. Stu's back with CVS. CVS. Let's see what's going on with CVS here. All right, so CVS has been coming down for quite some time. And let's take a look and put it under the microscope first on the actual big weekly chart here. All right, so we had kind of an interesting move up in CVS, pullback. My dad stopped at 1997. All right, so that was a pretty extensive pullback we had back in this area here. Met all the requirements for a wave 4, but this wave 5 kind of, let me just see if that even breached the top there. That's an interesting one. I don't think it did. All right, so we had a high here of 113.65 and a high here only of 110. So it missed it by $3. That's a tough call when that happens because, you know, this could have been a 3, this could have been a 4, and this could have been a 5. Usually for a wave 5, you have to exceed the top of wave 3. So that's kind of interesting. The other interesting thing is, let's look at the owl here. This owl here looks higher to me than this one. All right, and let me just measure that. And sure enough, that one, and I'm looking on another screen I have here that tells me the values. All right, 15.47. This one, okay, so yeah, so basically that owl's higher. So that's probably maybe more of a count like 1, 2, and we're still in 3. That could be a possibility. You'd even have to go longer term to verify that. So, okay, so you're getting a move off this bottom here. Let me just dump this fib here for a minute. All right, so another thing I like to look at when stocks pull back, regardless of the time frame, look at this area here. This was consolidation, and look where it stopped, right at consolidation. So for those traders that deal with price action, that's kind of a key area to go long on. So it acts as support, right? Now, if prices kept going down, then it would act as resistance. But in this case, that acts as support. And look at what we got right here off this support. Can you see that there? What did we get? Little pyramid, right? All right, so that is a long entry. The long would be one tick above it. Your stop would be below it. And since the stop is so close to the bottom, I just put it at the bottom. All right. Now, you have bullish divergence, but you still have a red situation here. So if you decided to wait for this to go green, okay, that certainly is a possibility. What I'd rather do here is take a look and see what the lower time frames are. So let's just go through the analysis real quick. Not a 5 here, okay? So this is not that based on the wave count, the owls and things like that that help us determine Elliott wave. This stopped right at this convergence level here. That's important, check. We got a pyramid, check. We do not have a green owl, no check. We do not have a red PTF, that's good, nor do we have a green, but as long as it's yellow, we can check that box because you can take a long or short trade with that. Now, let's take a look. One more thing is trend lines, okay? So if you drew a long trend line down here on this long-term chart, you're technically not above it yet. Okay, that increases the risk, right? So if you drew one here, okay, down to, this made a low here, then you're above that one. So when you draw trend lines, what you do is you look for a move down, look for a pullback, and then look to see if that move was exceeded. And it was kind of exceeded here, okay? So actually that broke a very short-term trend line, almost right at the pyramid. Actually, we could move that over probably to something like that, okay? So the only thing is a long-term trend line. Okay, so there's some good things and there's some negative things. So this is what being a trader is all about, is assessing that. Let's see if the lower time frames are supportive of a long trade. All right, so we look here, we have consolidation, but we had a break of consolidation. That's a good thing. We have a green owl, good thing. We have a yellow almost turning green, good thing. No trend lines on this are still valid to the short side, good thing. So this supports a long trade, check. All right, what's the momentum doing on this 60-minute chart? Well, we got a bullish owl, check. We got green pyramids, check. We got a green PTF down here, check. So these two long time frames, support a long trade. Now, that doesn't mean you're going to get a pullback. I mean, look how extended this is. So you want to put your stop right here at the bottom of that channel, if not a couple of ticks. If you can afford to put it under here, you do it. And I probably would put it here just to give it enough room. But I think that's worth a long trade. Not quite perfect, but it's signaling me to take that. So CVS is going to go for a buy, okay? Let's go ahead and take a look at BMY. All right, so BMY here, which we've looked at before, because you can see the trend lines and all the retracements drawn in. So this is one that's moving up, we think, into a target zone that we have on the weekly chart. So let's take a look at this. Now, it's very possible that this thing could blow through. This is the target here that we had recommended. It could blow through here and make another high. No question about it. Could do that. But also could come up here and make one more move down and test this bottom. So I kind of would take some profits here, all right? If it pulls back and the bottom holds, then I'd buy it again, okay? So that's kind of the way I would work this. I'm not going to recommend it right this second because it's getting too close to the target, right? Okay, so that's the only thing. So the next assessment here is, well, Ben, is it just, why wouldn't you think this thing is just going to take off and go higher? Because it certainly could. Yeah, I'm not quite seeing the kind of structure I want to see here. I got one top back here in the late 1990s, another top here. Almost looks like a triple top. All right, so that kind of makes me a little nervous about a long trade. I would like to wait and see what kind of strength occurs on this leg up, because it may just be like this for a while. All right, so not totally sold on it, but if you were long in the beginning on this, then that's kind of where I'd be thinking about it. There's no use to get out of it if you're long. I mean, obviously, you know, you're above all the trend lines. We got bullish charts on these lower time frames. We even have a green owl on the weekly. It's just that I think it's too extended at this point to get in. All right, so BMI, if you're long, stay. If not, Stu, I think it's not a good idea to get in at these levels. All right, Eleanor, how are you? All right, LPG, let's take a look at that one. All right, so, and you're long in all these. Okay, very good. All right, so first let's take a look at the overall chart. So we have data back to 2015, which is enough to give us kind of a good view on the weekly chart. So again, for those Elliott wave lovers out there, all right, this is a wave 3, right? Looks like now we're in a wave 4 though. So it looks like we're in a pullback wave, which should start, and I'll give you the levels I think it's coming down to in a minute, and should stop and we get eventually more higher highs. So that's kind of the way I'm looking at it. Now, in terms of that forecast, a couple things I look at to back me up. First of all, the slope on this move here is huge, especially when you compare it against all this activity here. So wave 3s are usually the most enthusiastic, sharpest, direct moving wave whenever you look at a chart, okay? C wave can be like that too on corrections, but in any case, that's the one that moves up the quickest and with the least amount of effort. All right, so now, all right, notice how many pyramids we've had, a lot. That's also characteristic and common in a wave 3. So everything from price structure supports a wave 3. All right, and even our owl agrees with us, okay? Because it's saying wave 3 here. Now, it's in a wave 4. How do I know that? Well, we've taken out this level here. We've got a red owl here. You have to have a red owl on a wave 4 in a bullish trend. All right, so that's one of the requirements. Otherwise, you can have a pullback like we did here. This is a great example. You had a pullback here, but the owl never went red because you're still in wave 3, one more high. Now you're in wave 4, which means it's going to be a messier pullback and a more extensive pullback. So if we just quickly grab some Fibix retracements, all right, we've hit the first level of that pullback, okay? So that's a good sign, all right? Usually we get an ABC correction. Looks like we have an A, maybe a B, C. That would be nice and clean. That's usually not the way it happens. Usually it comes down here, goes up here, comes back down, and then goes. Markets aren't always that easy. Markets are competitive, okay? So anytime an institution or a market maker can actually increase their liquidity, they'll do it. And if they have the power to drive it down to one more low to take out long stops, they'll do it. All right, they're in the business of making money. So keep that in mind. So you got to keep your stop low if you decide to go in here. If you think this is an ABC, God, you're going to have to put your stop down there, or else they're going to maybe wiggle you out of a position. And if they do, you can always just get out and get back in too. All right, so your stop placement can be determined on your mindset of how, if you really have a problem with getting out and getting back in. All right, back to the analysis here. So we've got a green PTF, so more highs coming, and eventually we should take out this high. So things are looking really good. The question here now is the correction over? And I'm very suspect. Okay, very suspect at this time. We still have a red owl that's moving down with vigor. I don't know if you can see that at home, but the histogram here on this weekly chart is still heading down. So we'll see. All right, one price bar to the upside does not change a trend. So you got to be a little careful there. Let's drop down here and see what we've got cooking here. All right, so lower time frames. Okay, interesting. So we just had an active bearish pyramid get taken out. We have a red here. We have green here. Okay, so that's saying another high above here based off this PTF. And this is green and this is green. All right, well, now here's what you could do. And here's what I would recommend doing. Whenever you get a move up off a bottom, that move could go and go and go, but eventually it ends. And then you get a pullback. Then the pullback is really important because that's going to tell you whether the trend is over. Because if that pullback cannot go below that bottom, sometimes you get a double bottom, and then exceeds back up, now you're in an uptrend. Higher highs and higher lows. Your buy point is here. Okay, so that's what I would probably wait for on this one. So I'm going to put LPG. It's a great looking opportunity, but I'm going to put it on a watch list because I don't think there's enough follow through quite yet to be sure we're at a bottom here. Okay, hopefully that makes a difference. For you, Eleanor, at this point, you've got a decision to make because you're already long. Do you want it? I mean, you've obviously suffered this pullback already and you're still in it. Do you want to take the chance and suffer even more of a pullback, knowing, however, in the future that this should recover and go higher? Okay. You know, if you're an investor, you kind of, as long as you're not at the end of a wave 5 on a weekly chart, you're probably going to hold it, right? So I'm going to leave that up to you. I don't know how active of a trader you are with this stuff, but since you waited this long, I'd probably wait a little longer with realizing that we could go down into the 20s before this correction is over, or maybe not. It could be over now. All right, so hopefully that helps. All right, CELH. Let's take a look at that one. All right, so you're long on this one. I don't know if I should ask you where you got long, because certainly it has trailed off here and has gone way below its support area. And look at all the pyramids on the daily chart. My goodness. All right, so for swing traders, they would have been short. Okay, but let's take a look as an investor where you are here. Okay, so wow. Okay, so you still have a green PTF. That's interesting. However, all right, if this move down continues, that could abruptly turn red. So you got to watch that. You probably held on to it too long, because usually the lowest point you want to hold it is right about there, right under that wave 4 retracement area. So that would have been just under $46.08. But if you're still long here, all right, then you've already missed the best place to get out. With a green PTF, I would probably just continue to hold it and put it under your pillow and not look at it. All right, that'd be the best thing to do at this point. Now, with that said, some encouraging news is we got bullish divergence. We got a number of pyramids in a row. So we're getting closer and closer to a bottom. Okay, so that's the good news. Okay, the market's moving waves. All right, so they're always moving in waves like this, sideways waves and down waves. So as long as you understand that, then hopefully that'll keep you from panicking out on most situations. But this wave down will end and you'll get it replaced by a more optimistic wave at some point. Not quite there yet, all right? The pyramids did a wonderful job of making money on this short trade. I mean, look at them, all right? Your current stop here would be right here, okay? So we're getting close. Bullish divergence, no longer a red PTF. This is yellow right now, all right? So that is good. So if you haven't gotten out already, I guess I would recommend just staying with it unless you just got in, okay? Then that may be a situation where you could still stay with it because you'll get a bounce. So at the very least, let's say you're trying to time this, but you got in a little bit early to the long side. Well, chances are when this ends, wherever it ends, you're going to get a pull up into this region here. So you can make money on that. All right. It's just you got to try to be pretty good at timing bottoms, which is a tough thing. Okay. So that's that. Okay. GCT. Let's see what's going on with that bad boy. All right. Again, we can see on the daily chart that dipped, but has turned around. Not a lot of history on this one. Look at that. Okay, green PTF is what I can take away from here. Is this a wave 3? It's telling us here only because there's not a whole heck of a lot of data. So I'm going to let that one go. But the PTF is kind of important. That is current. So that's saying highs above here. Okay. It's come off of a move down. Still got a red PTF owl, sorry, on the weekly. But that's been replaced by green ones on the short term. And we've looked at this before. So again, this is one where it took a dip a little bit lower than it should have. My concern on this from an Elliott wave standpoint is, let's take a look. Okay, so if this is the starting point, because this is the all-time low, then this would be a 1, this would be a 2. You would assume this is a 3. Wave 4. It's a hard, fast rule. Should not go inside or below wave 1, and it did. So that unvalidates the wave count. So what could the wave count be? Hard to say right now. This is a higher high than this. Otherwise, I'd say maybe a 1, 2, and a big 3 coming. All right, so Elliott wave, a little foggy on this one. Retracements, got to get rid of these, okay? So, because they're not valid really, all right? So here, the only thing we can say is we're in an uptrend. We've got green here. We got one pyramid here. We have no longer a situation there. So whenever I get stuck in a situation, I draw fib retracements, and we're already in a proposed target, okay? So again, I don't know where you got long. Hard for me to tell you whether it's going to make another high. This is a very wave 3 looking wave, okay? No question about it. It just got interrupted by this move down, and that's the problem, okay? So it could have been a 4 here, failed 5 here, and a change in trend here. So there's many scenarios. Again, not a lot of data to go back and do a complete analysis because it only started in 2022. All right, so I guess I would stay long and maybe take a trend line here, draw it up from here. And if we actually could draw another one now, because you just made another high today, thank goodness. It'd be a real short one if you want, but that's, as long as we stay above those trend lines, you can stay long, okay? All right, so that's GCT. Obviously, it's not one I'm going to recommend at this point. Okay, let's keep going here. All right, Eleanor, let's take a look at a couple more from you here. SMCI. You probably won't get this information from your broker, right? Brokers love to tell stories. They don't like to really look at technical analysis too much. All right, so let's see what we got here. That's why you should always trust and verify. Who said that? Ronald Reagan, I guess. Trust and verify. So when your broker says buy something, go get your art software and take a look and see if the price structure is agreeing with his analysis. All right, so here's SMCI. You're long on this. Again, I don't know. I assume you're long. You're not telling me, so maybe you're thinking about long. If you're thinking about a long, wait a little longer, okay? It's not quite, this movement down is not quite over. All right, big move up, big retracement down. Here is probably wave one high. Let's hope that holds, okay? We kind of tested it. So it came down really close. But, you know, that's a downtrend still, okay? So you don't kind of want to go against that right now unless you're a bottom fisher. All right, and you can see the downtrend in all three time frames. So stay away from that one. All right, CMG. All right, so this one looking a little better. Let's see what we got here. All right, we're still in a fairly big move up here. Biggest owl is here. So we're topping at wave 3 there, right? Let's see where we can draw in a retracement. Now notice I don't always draw the retracements in at the very bottom of the chart. I usually try to find an Elliott wave 2 to anchor that first one on. So that's you know, something that we do here. So we have not hit the high probability target zone. I would imagine this is a 3, and this is an A wave in a correction, a B wave, and as long as it doesn't go into a complex correction, it'll look something like this with a wave 4 bottom being here at the bottom of C wave, and then we go up into a new sequence for wave 5. So I don't think the correction's over. I think we're probably going to go, boy, we could go as low as in the 40 range again, maybe 39. So you've got to decide whether you want to handle that before we get a rebound. Okay, so that's kind of where I would be on that. Now, I'm not going to recommend that, but I would recommend it once the correction's over. In other words, once prices get down in here, then I would buy it. You know, these fib retracement areas, look at these as buy zones, not necessarily as sell, okay? Those are buy zones. This is an opportunity to either add to your position if you're long-term, or if you're short-term and you got out here on the pyramid, which is a smart thing to do, then you can add back in here, right? So look at it that way. So this one probably a little more correction time needed. We're seeing some bullishness on the daily chart because it's B wave. B wave is bullish, but it should give way to a move back down, okay? And we've had a move here already, okay? And so that marked the end of that move, ABC down there, probably 1, 2, 3, 4, 5, maybe 4, 5. And this is your ABC up, and then now your longer term down. Okay, so that's kind of where I'm at before. All right, so let's take a look at AMAT. All right, so let's take a look and see with applied materials here. I remember when I was first trading applied materials back, boy, a long time ago. I think applied materials was pretty hot back in the mid-90s, probably I was trading it. Anyway, I had a bad trade on applied materials. I used an option going the wrong way, and it didn't treat me too well. So one of those bad trades that left actually a good impression in me, because it taught me never to go against my risk control, right? All right, so applied materials. Let's see where that bad boy is. All right, so got a little bit of a pullback coming on here. Let me just see here what's going on with this wave 3 here. I want to double check that. That's 214. What's the high here? Yeah, it's only like one. Let me just say 41, 43. Yeah, so this is higher than this. So this is a wave 3. All right, so as this unfolds, you would have originally thought this was a 4 or 5, right? But 5 cannot have a bigger owl than 3. You have to have bearish divergence, and that didn't happen. So this is still in wave 3. Okay, great, that's good. So after wave 3, however, we do have a correction, okay, coming in right now. So in a case like that, let me draw fibs in. and we're looking probably that is your target zone for this pullback, and then it should surge up. So 3, 4, and 5. A, probably B, maybe just completed, and C. Got it. All right, so if you're in it, it will pull back probably more. Could go down, believe it or not, into the 140 area. Okay, that's possible. All right, you're at 200. So you got to decide if you can handle that. If not, you might want to get out. Okay, or you put your stop, in case this is a shallow one for whatever reason, you can put your stop under there. Okay, maybe it'll perk back up and make a new high without going into that. 15% of the time that happens. Okay, 70% of the time they go in here. So you could put your stop under there and get out if it drops back down there. That would be around 180 or something, whatever that low is. 179. Hold on. 171.61. So, your stop would have to be a couple ticks under that. All right. So, yeah. Okay. So that's Applied Materials. All right. Thanks, owner. Okay. All right. So we're running over a little bit here. So let me just go through a couple other ones real quick here. All right. XLE. Great picks today, by the way, guys. XLE. All right. Absolute mess on the daily chart. All right. Usually when I see that, I run for the hills. All right. I grab my mountain bike and head out. All right. Let's see if the weekly chart is any better. All right. So looking to go long on both. I wouldn't do it. All right. Now you got a green PTF here. Maybe you'll get one more pop up, but you could get a correction. This could remain green and then you get the pop up. So, again, is it better to get in the beginning or the end? And we're starting to drift sideways. So you're a little range bound. You could go in and get stuck at a little bit more of a range here. So I'm not seeing it, Jim, on this one. All right, same thing with this chart here. You got a green PTF here. So, okay, maybe it'll clear this high, but I think there's better opportunities than playing Russian roulette with that. Because if that goes higher, it's 100. Okay, and you're at 92, 8 points. That's not, it's not even 10%. So why bother? All right, that's kind of the way I'm looking at it. All right, let's take a look at silver. All right, so silver we've looked at before. This one is moving up nicely above all trend lines. Let's look at the longer term scenario here. Okay, so far when you look at this chart, the bottom is here, okay? And it's held, all right? We had a double bottom here, okay? That's a good sign. And since then, it's been drifting. And that's what you can get sometimes, all right? It may not make any more lows, but it could drift, and it certainly has. You got a green PTF, so the chances of getting above this area here is pretty high, all right? And, you're completed, this is kind of interesting, big swing up here, then a full retracement almost. Another big swing, and this is the kind of situation, if you're long-term in silver, that you've experienced, a move up, move back. So it's got a green PTF and it's got a green owl now. And yes, we have a new pyramid forming here. And we're starting to break out of this channel that we've been in for a year now. So that's a good sign, all right? Probably more than a year. So that's a good sign, right? So this is bullish. Next thing I got to try to figure out is where is it going? The volume's picking up here too, but where is it going? Okay, that's the question. It's tough to get a forecast on that. Okay, are we in the beginning and we're going to take off here, or are we going to stay like this? There's a lot of pundits out there that are pounding the table to buy silver. For a variety of reasons. From a technical standpoint, all right, well, let's take a look at the shorter time frame here. And I'm bullish on it, but long term, not so sure what that's going to do. All right, so again, this is moving up, and you don't want to be short, that's for sure. If you're long, I would stay with it. We got another pyramid printing here. So I would stay with that as much as you can. Broad-based, we had a bottom here, then a pullback that formed a double bottom. So this could be a huge move up, all right? Certainly could be. But you also could move up a little bit and have a big pullback. So, you know, there it is. There, and you got a red PTF on the 60 minutes. So probably not going to recommend this, but if you're long, I'd stay long and have your stop kind of tight. All right, that's where I would do it at this point. Now, if we make another high here, like take out this pyramid turns and use the pyramid stop, because that's going to be almost in the exact same place that if you drew a trend line, it would be something like that, if that makes another high. It's too early to draw the trend line, though. All right, that kind of thing. All right, let's see what we got cooking. I think that's it, which is good because we're pretty much at the end. Let's look up the one last one for Eleanor here. PLTR. PLTR. All right, so you're long this. Well, that's a good thing, okay? I don't know, again, how long you've been long, but maybe I should start asking that question next. But in any case here, not much history, but at least you can identify the uptrend with ease and look at all the pyramids. All right, so this is not a buy for most people because it's too late. All right, again, do you want to buy here or do you want to buy here? I think the answer is obvious. It's just a lot of risk for a pullback, right? So you don't want to be buying at the high. Okay, so pyramids, you've had enough here. Looks like this pyramid might have even been higher here than this. So that's kind of interesting. This is still moving up. So this owl could exceed this one, which I think probably will happen. I would stay long. Long term, put your stop under here. That's going to give it enough wiggle room. And that's a low of 29.31 and we're sitting at 40. So that's, you know, I wouldn't want to give it more wiggle room than that. I don't even think I'd want to give it that much. All right. So, we've got yellow here, green here. I don't think you're going to have any trouble with this before we meet again next week. But you know what? I'd bring it back next week. Let's keep a close eye on this because eventually you're going to get a reversal. All right, but it's not here yet. But if we look at it every week, Eleanor, then we'll be able to spot it when it happens. Okay? So bring it back and we'll give you an update. Have your worst case scenario, your emergency stop under this pyramid, okay? In case something bad happens and it reverses dramatically. Otherwise, I don't think that's going to get hit. I think it's going up. All right, so that's it for today, guys. Thanks so much. Great picks, all right? And yeah, I agree, Gene. Everybody did great. You guys are awesome. All right, so we're going to put the recording up. In the recording, I put links to our software if you want to buy that. It's really great software. I couldn't trade without it. It does a super job, and it takes into account price action, but also takes into account underlying structure of momentum and things of that nature. So you can check that out. We've got courses, we've got books, we got a prop firm link I gave you for active day traders. Day trading is a trip. If you get into that, buckle your seatbelt because that is one interesting endeavor. All right, so that is out there. Apex is a place we recommend. I got to be honest with you, it's pretty good outfit in the fact that you know, they've always paid us when they said they were going to pay us, and they have also give you free data. Everything works great. I have no problems with them. Any questions you have, I find their customer service superb. Okay, so all good things to say. All right, so, oh yes, Gene is right. Give us a like now, all right? And that will help our channel, and we probably need help, so definitely do that. All right, and then finally, Eleanor, thank you as well, okay? We appreciate that, all right? Appreciate everybody bringing their picks because that's what makes it interesting, right? Okay, so we'll see you next Friday, all right? Have a good weekend, everybody. Thanks so much. You know what I'll do for fun, like I always do? I'll put on some of these lower time frames. Now, you know, we have a day trading room and we do all that kind of stuff. So these are the time frames we use, and I'll just run over this real quick. We got a 15-second, 1-minute chart, and 5-minute chart. So we still use the 3-chart analysis. It's just that the time frames are extremely low. Okay. So we're trying to, catch intraday trends and things like that. So there you have it. All right. And the market is moving off its double bottom. Check this out. This is a 1-minute chart, but you see this double bottom, but look at all the support you had here. Okay. Look at that. So slam dunk for a long trade. When you see the market do that, all right, that's a long trade too. But when this holds like that, that's a big, powerful spring you're going to get off that. That's exactly what you got. On our 5-minute chart, looks like this was a 3 early this morning, 4. So we should take out the high here before the end of the day. So you probably want to be long. And again, if you're trading the 5-minute chart, give this stop some room to pull back. If you're scalping short time frames, you're almost at the end of this swing. So you got to be a little more aggressive. And I'll leave that up to you on how you want to play it. Okay. We got a level here on the gap here, value gap right here that will get hit. You'll hit a little resistance up there. So I think probably this move up here is going to pull back. Okay, pretty soon. So if I was trading short time frames, I would probably have my stop probably on the 15-second right under here. Okay, because this hasn't pulled back enough on the 1-minute for a pyramid. So use the pyramids at the very least to get out. If you're short term, I'd have it right there. Okay. If I'm long term, all right, and I want to make a phone call or do a little work, put my stop down here. Okay. And yeah, you might get a pullback, but the odds are in your favor, and odds or probabilities are in your favor. You'll take out that high so you can stay long. All right, everybody. I'll leave this on here. I'll put a little music. We can see what's going to happen. And by the way, I think what we're going to do too, just as a side note here, is we're probably going to start live streaming Yard software on these 3 time frames, maybe starting Monday. We're just going to put up a chart and let it stream for hours and hours. I'm not going to do any commentary, but I'll just let it stream up there and you can watch it. Don't trade from it because it'll be a little delayed, but you can check it out and we'll just leave it there running. So that's kind of something we're contemplating. I've got to see if that's okay with the software we use for streaming it. They'll allow me to leave it up that long. But there's other companies that do that. And it's kind of fun to watch the markets unfold in real time with our software. So you can check it out. All right, everybody. We'll see you next week. Thanks so much. Have a good one. Well, as you can see, we certainly got the move down. So that was to be expected, not quite over yet. All right, we're going to sign off now, everybody. Have a good weekend.